Hello, everyone. Welcome to the market opening bell on Tuesday, May 13th. China and the US issued a joint statement to mutually reduce tariffs for 90 days. China will lower tariffs on US imports from 125% to 10%, while the US will reduce tariffs on Chinese imports from 145% to 30% and establish a mechanism for continued negotiations. This spurred a significant rally in Hong Kong stocks. The Hang Seng Index opened 316 points higher on Monday, surged further after details of a China-US trade joint statement were announced in the afternoon, peaking at a 117-point gain to 23,685. It closed up 681 points or 3% at 23,549, marking 8 consecutive trading days of gains. Cumulative rise of 1,577 points or 7.2%. The X-share index rose 250 points or 3% to 8,559, and the Hang Seng Tech Index climbed 267 points or 5.2% to 5,447. Total market turnover surged 99% day on day to 322.4 billion Hong Kong dollars. Southbound funds saw a net outflow of 18.528 billion Hong Kong dollars from Hong Kong stocks, the highest single-day net sell-off since February 24th, 2021, and the second largest in history. Notably, net purchases included BYD Electronic and CNOOC, while net sales included Tracker Fund $5.602 billion, Tencent $3.665 billion, Xiaomi $2.116 billion, SMIC $914 million, HSCEI ETF $756 million, Xpeng $666 million, Meituan $467 million, Agricultural Bank $329 million, China Mobile $284 million, and Alibaba $239 million. Southbound funds have net sold Tencent for 5 consecutive days, totaling $8.429 billion, and Xiaomi for 5 days, totaling $6.109 billion. Mainland Chinese markets also rose significantly. The Shanghai Composite Index closed at 3,369, up 27 points or 0.8%. The Shenzhen Component Index closed at 10,301, up 175 points or 1.7%. Combined turnover in Shanghai and Shenzhen reached 1.2783 trillion yuan, up 86.4 billion yuan from the previous day. The renminbi US dollar central parity rate was set at 7.2066, up 29 pips from 7.2095 the previous day. Technical analysis. Initially, no one expected China and the US to reach an agreement so quickly, so the rebound from the April 9th low of 19,260 was seen as just a corrective wave, given the current rally has exceeded 0.618 of the prior decline. The market's pattern suggests a sharp drop due to sudden negative factors, followed by a rapid recovery as those factors dissipated, forming a V-shaped move. Resistance levels for the Hang Seng Index are at 23,900 and 24,500, with support levels at 23,200, which is last Wednesday's high, and 22,800, where the 50-day moving average lies. Export stocks rebounded sharply, with BYD Electronics soaring 13.8%. BYD Electronics revenue mainly comes from mobile phone components, assembly services, and other electronic products, with its primary markets in China and other Asian regions. Its direct exports to the US market are relatively small, estimated at no more than 30% of revenue. For export-heavy stocks, top picks include Tectonic Industries, Chevron Holdings, and Stellar International. Tectonic Industries, which manufactures and sells power tools and outdoor gardening equipment, has the US as its largest single market with an estimated revenue share of over 60%. Chevron Holdings, also in power tools and outdoor equipment, relies on the US as its most important market, with an estimated revenue share of over 70%. Stellar International, which develops and manufactures footwear and leather goods for brands like Clarks and Cohan, has an estimated US revenue share of about 50%. Stellar operates manufacturing bases in China and Southeast Asia, example Vietnam, Indonesia, with some products exported to the US via Southeast Asia to avoid tariffs. However, US tariffs of 46% on Vietnam and 32% on Indonesia have impacted Stellar. JD.com, Tencent Music, JD Logistics, Samsonite, and Nixon Foods will release results today, boosted by the extension and expansion of the trade-in subsidies program to include mobile phones and 3C electronics. JD.com's Q1 revenue is expected to range between 288.5 billion yuan and 295.9 billion yuan, up 11% to 13.8% from 260 billion yuan last year. Q1 non-GAAP net profit attributable to ordinary shareholders is projected to be between 9.812 billion yuan and 11.47 billion yuan, up 10.3% to 28.9% from 8.899 billion yuan last year. US stocks surged on Monday, with the Dow Jones Industrial Average closing near its daily high, up 1,160 points or 2.8% at 42,410 points. The S&P 500 rose 184 points or 3.3%, closing at 5,844 points, while the Nasdaq climbed 779 points or 4.4%, ending at 18,708 points. The Chicago Board Options Exchange Volatility Index (VIX), often called the Wall Street Fear Gauge, dropped below 20 for the first time since March. The last time the VIX fell below 20 was on March 27th, when it closed at 18.69, before spiking to a high of 16.13 on April 7, after Trump announced reciprocal tariff policies in early April. The Golden Dragon China Index, which tracks Chinese concept stocks, rose 351 points or 5.4%, reaching 7,449 points. Alibaba and Pinduoduo gained 5% to 6%. Amazon and Meta both rose about 8%, being the top performers among the Magnificent Seven. Tesla increased by 6.8%, Apple by 6.3%, and Nvidia by 0.5%. By 5%. The US will release April inflation data today. The April CPI is expected to rise 0.3% month over month, compared to a 0.1% decline in the previous month, and is forecasted to increase 2.4% year over year, unchanged from the prior value. Core CPI is projected to rise 0.3% month over month, up from 0.1% previously, and is expected to increase 2.8% year over year, consistent with the prior value. Our stock pick today is Xtep International, stock code 1368. In November last year, Xtep International completed the divestiture of its K-Suites and Palladium businesses, shifting its strategy to focus on growth and operational optimization. The company has realigned its strategy to concentrate on running and efficiently allocate resources. Currently, the group's three profitable brands, Xtep main brand, Saucony, and Merrell, each have unique attributes, reinforcing the group's leadership in the running market. These brands are expected to generate strong synergies and achieve sustainable growth. For the year ending December 31st, 2024, the group's continuing operations, recorded a 6.5% revenue increase to 13.577 billion yuan compared to 2023, with a gross margin of 43.2%, up 1.4 percentage points year-on-year. Operating profit from continuing operations grew 9.3% to 1.965 billion yuan, and profit attributable to shareholders reached a historical high of 1.238 billion yuan, up 20.2%. According to Xtep, Saucony has achieved significant success over the past 5 years by offering superior performance and differentiated innovative products, leveraging synergies with the Xtep main brand to enhance competitiveness in professional running gear. In 2023, Saucony became the group's first new brand to achieve profitability, surpassing 1 billion yuan in revenue in 2024. In the first quarter of this year, Xtep's main brand retail sales, including online and offline channels, recorded mid-single-digit year-on-year growth, with retail discounts ranging from 25% to 30% and channel inventory turnover of approximately 4 months. Saucony's retail sales grew by over 40% year-on-year, and the group will continue to strengthen Saucony's brand strategy while launching new flagship and concept stores to enhance store image and prepare for increased supply of apparel and lifestyle products. Meanwhile, China's rapidly growing outdoor sports market provides Merrell with strong opportunities to expand market share in the coming years. The group has developed products with advanced functionality and versatility for outdoor enthusiasts, addressing niche markets and diverse outdoor activity needs to seize market opportunities. Merrell has achieved excellent results by leveraging omni-channel sales and brand image to actively expand its e-commerce business. Recommended buy price 5.5 Hong Kong dollars, target price $6.05, stop loss $5.15. I do not hold the aforementioned stock.